And activist investors lining up in recent days, launching a series of new campaigns, from Nelson Peltz's Trian Fund Management reigniting its Disney proxy battle to VF Corp feeling the heat from activist investor engaged capital. So what is the trend behind this bustle in shareholder activism? Here to discuss is Patrick Gadson, Vinson and Elkinsm co-head of the Shareholder Activism. So let me ask you, Patrick, just to start with, what explains these trends we're seeing here, Patrick? Is it falling public equity values? Is that what explains it?
Well, I think those are two different buckets, right? So for Disney, this is second wave activism for them, right? This is the sequel the board didn't want. So it's slightly different than VF Corp that's dealing with activism really from engaged for the first time. Obviously, undervaluations always drive shareholder activism, and we've seen a lot of that over the last few years. But we're actually not seeing more shareholder activism exponentially. We're seeing pretty stable growth in the asset class year over year. It's just we're seeing very name brand or collection of name brands in the case of VF Corp activism happening in the public space.
So, Patrick, that implies then that there isn't necessarily anything special about this moment in time. It's just sort of activists being opportunistic.
It is. I'd say that Disney, in a way, is special, right? It's not very frequent that you see shareholder activism at a huge brand name Americana company happen in back-to-back years, right? That's very, very rare to happen. One of the reasons it's very, very rare to happen is because the sort of metrics and means of affecting change are not the same, right? So the first time a shareholder activist is encountering a company, you make your case for change from a shareholder activist perspective. It's usually 1 to 4 prongs, as we saw with Trian and Nelson Peltz, and it has a lot to do with always operations, strategy, capital allocation, governance. After you've done that, if you aren't successful, the company has a year to work on all those things, right? As we've seen Disney do. So it's much more difficult to convince institutional shareholders and proxy advisors who make the recommendations that are followed by the larger institutions that additional change is necessary, right? I mean, you've had enormous cost-cutting programs announced by Disney. You've had the streaming business very much sort of cut in terms of its budget and its overhead. And then you've also had some wet blankets thrown on the stock over the last few quarters, right? When you see announcements like we saw last night, where, over the course of the past few quarters, Disney's profits have declined 20%. Obviously, shareholders are not going to love that, and that's probably why the stock's down 30% since the announcement of the reorganization and cost-cutting plan. So it's a very unique circumstance when you have a lot of changes that were actually done in the wake of activism, married to brand new circumstances and quote-unquote issues or problems that Disney's had to deal with, including the labor disputes, including the tiff that got in with Charter. So it's very unusual. You'll see something like this in shareholder activism.
And Patrick, what about ESG? Is that still a focus for activists, or has that cooled a bit?
That's a really great question. So over the past decade or so, it was sort of taken for granted that ESG was something that not only all institutions should be advocating for, but that all public companies should be striving for in order to soothe the concerns of those institutions at home, right? Over the past couple of years, the willingness to lean into that has obviously changed, right? And a lot of that has to do with the political lens, right? The anti-woke sort of crowd that's risen up to push back a lot of what has been some significant progress in the ESG space over the last few years. So I wouldn't say it's gone away. I'd say that empirically, what you're seeing is fewer companies sort of be, more broad-breasted in mentioning it in their proxy statements as frequently and in their public communications. You're not seeing that quite as much. But it's not something that companies are fully walking away from, right? Because we haven't seen the institutions, the BlackRocks, the State Streets, be willing to sort of totally tone down their rhetoric in terms of it being a desire for companies to pursue strong ESG policies. If we actually did see that, right? If we saw the shareholder bases of, we call it, the S&P 500 at large, rise up and say, hey, we think that ESG is a direction that we no longer want companies to go as shareholders, then we would see, probably pretty aggressive change and repivoting. But we haven't seen that from the larger institutions. So from the company's perspective as well, unless you're going to tell us this is no longer something that you want us to pursue, we're going to assume that it's something you do want us to pursue, and we're going to consider sort of the pushback from the more sort of anti-ESG, anti-woke crowd to be more of a minority group of our shareholders as opposed to a set of voices that reflect the broader shareholder base.
Gotcha. Helpful context there, Patrick. Hope to catch up with you again soon on all of these issues. Patrick Gadson, thank you.
Thank you.